All right, welcome everyone to the deep dive. Today we're digging into a pretty detailed document. It's Dr. Reddy's Laboratories Audited Financial Results. Covers the fourth quarter and the full financial year, ending March 31st, 2025.
Yeah, this is the big presentation they shared with the stock exchanges, NSE, PSE, NYSE, lots of numbers in here.
Exactly. So our mission really is to give you the highlights, the key takeaways from this, maybe around 5 minutes or so, just a quick snapshot of how they performed.
Sounds good. Where should we start? Full year.
Yeah, let's start with the big picture, the full financial year, FY2025. What's the headline there?
Well, the headline is definitely growth. Record annual revenue, 32,554 crores. That's up 17% compared to the year before. Pretty substantial.
17%, wow. And is that all organic or does that include acquisitions?
Good question. It includes their acquired consumer healthcare NRT business, nicotine replacement therapy. But interestingly, even if you strip that out, the underlying growth were still 12%.
Okay, 12% underlying. So still double-digit growth from the core business. That's solid.
Yeah, it really suggests, both sides are working the existing business and the strategic buys.
And what about profitability? Revenue is one thing, but did the profits keep pace?
They did. Highest ever EBITDA as well. That came in at 9,213 crores.
Okay.
Which translates to a 28% margin, and that figure itself is up 11% year over year.
28% margin. That's pretty healthy, isn't it? Shows they're managing costs well, too.
Exactly. It's not just top-line growth.
Yeah.
And that feeds down, profit before tax, PBT, was 7,678 crores. That's a 24% margin, up 7% year over year.
Right.
And then profit after tax, PT, 5,654 crores. That's a 17% margin, up about 2% year over year once you adjust for minority interest.
Right, so solid profit numbers across the board for the full year.
Absolutely. And another thing to note maybe is their return on capital employed, ROCE, came in at 28% for FY25. Very robust.
And the balance sheet, are they carrying much debt?
Actually, the opposite. They ended the year with the net cash surplus, 2,454 crores as of March 31st.
Wow. Okay. So a strong cash position, too. Gives them flexibility, I imagine.
Definitely. Lots of firepower for, future investments or acquisitions.
Okay, so that's the full year. Record revenue, record EBITDA, strong underlying growth, healthy margins, and cash in the bank. Pretty positive picture. Now, how did things look in the last quarter, Q4? Did they finish strong?
They really did. Q4 actually saw their highest ever quarterly revenues, 8,506 crores.
Higher than any previous quarter.
Yep. That's up 20% compared to Q4 last year and also up 2% from the previous quarter, Q3.
So sequential growth, too. And profitability in Q4.
Followed the same trend. EBITDA was 2,475 crores. That's a 29% margin for the quarter, up a big 32% year over year and 8% quarter over quarter.
Okay.
And PBT was 2,005 crores, PEAT euros 1,594 crores, both showing really strong growth compared to last year's Q4.
And the underlying growth for Q4, excluding that NRT business again.
Still strong. Underlying overall growth was 12% year over year and 2% quarter over quarter. So very consistent with the full year picture.
Right. It really sounds like they had a strong finish to a strong year.
Yeah.
Hitting records on both revenue and profit in that final quarter.
Yeah, it paints a picture of, sustained momentum.
Were there any specific highlights or strategic moves mentioned alongside these numbers, things that explain how they achieved this?
Yes, definitely. They mentioned completing the UK integration for that acquired NRT business in May 2025, so just after the year end, but important progress.
Okay, getting that acquisition bedded in.
Right. And partnerships seem key. They highlighted a new one with Henlius. This is for exclusive rights to commercialize a Dargnumab biosimilar.
Dargnumab. That's a big cancer drug, right? So U.S. and Europe.
Exactly. Significant potential there. They also partnered with Biothera for ustekinumab and golimumab biosimilars.
More biosimilars?
Yeah.
Where are those targeted?
Primarily Southeast Asia for those ones, so expanding their biosimilar footprint geographically.
Makes sense. Anything else on the product front?
Yes. Their denosumab biosimilar filing was accepted by the U.S. FDA. That's another important step.
Denosumab, osteoporosis, and bone mets, another big one.
Correct. And they expanded their partnership with Sanofi in India for Beyfortus. That's for RSV prevention in infants.
Right. I remember hearing about that.
And a couple of other India-specific things.
Yeah.
Launching Sensimune TM for dust mite allergies. That's a partnered product. And participating in the government's Jan Aushadi program with one product initially.
Okay, so a mix of integrating acquisitions, forging new biosimilar partnerships, advancing their pipeline, and expanding existing collaborations. Busy year strategically.
Very much so.
How did the different business segments perform in Q4? Can we break that down a bit?
Sure. Global generics was the lion's share, obviously. About 89% of total revenue at 7,536 crores. That segment grew 23% year over year, but remember that includes NRT. It was up 2% quarter over quarter.
Okay, and within global generics, North America.
North America brought in 3,559 crores, that's 42% of the total, grew 9% year on year and 5% quarter on quarter. They mentioned new launches helping, but also the usual price erosion offsetting some of that.
Standard story for North America generics, yeah. How about Europe?
Europe was 1,275 crores, about 15% of the total. Now, this is where the NRT acquisition really shows. Year-over-year growth was a massive 145%.
Wow, okay. Because of NRT.
Mostly, yes, and improved sales volumes. Quarter-on-quarter growth was 5%. If you strip out NRT again, the underlying growth in Europe was still a very healthy 30% year-over-year, but only 1% quarter-over-quarter.
30% underlying year-on-year is still impressive for Europe. What about India?
India contributed 1,305 crores, also around 15% of revenue, grew 16% year-on-year and 3% quarter-on-quarter. They flagged new product launches, including those in-licensed vaccines from Sanofi, and also some price increases driving that.
Okay. Strong domestic performance. And emerging markets.
Emerging markets. 1,398 crores, so 16% of total revenue. Also solid growth, 16% year-over-year, 3% quarter-over-quarter, driven by new launches and higher volumes there as well.
So growth pretty much across the board in generics, though driven by different sectors in each region.
Exactly. Then the other main segment is PSAI, pharmaceutical services, and active ingredients.
Right, the API business.
Yeah, and services. That was 956 crores, about 11% of the total revenue in Q4. It also saw strong growth, 16% year-over-year, and interestingly, 16% quarter-over-quarter as well.
What drove that?
They pointed to new API launches, higher API volumes generally, and growth in their custom development business, the CDMO part.
Okay, so good performance from the PSAI segment, too. Seems like all engines were firing in Q4.
It really does look that way based on these numbers.
Did they mention anything else? Maybe on the ESG or sustainability front? Sometimes companies include that.
Yeah, they did, briefly. Highlighted a few recognitions. A good EcoVadis score, placing them in the top 15% globally. An award for CSR Program of the Year, a CII Climate Action Award, being in the leadership category for corporate governance.
Okay, sounds like they're ticking those boxes.
And importantly, from a regulatory standpoint, they mentioned achieving voluntary action indicated, or VAI status from the US FDA for their Bolaram API facility.
VAI is generally seen as a positive outcome after an inspection, right? Clears the path.
Exactly. It resolves previous concerns.
Okay, so wrapping this up then. If we boil it down, Dr. Reddy's had a record-breaking FY2025. Highest ever annual revenue, highest ever EBITDA.
Yeah, driven by, it seems, a good mix of their core business doing well organically and that strategic NRT acquisition adding a significant chunk, especially in Europe.
And Q4 finished the year on a high note with its own record quarterly revenue and strong profit growth, continuing the momentum across pretty much all segments.
It really sets a strong foundation, which leads to, I guess, a question for you, the listener, to think about. Considering this strong financial health, the cash surplus, and these strategic moves, particularly in biosimilars and partnerships, what areas do you think will be most crucial for Dr. Reddy's future growth? Where should they place their bets to keep this impressive trajectory going?
Yeah, that's a good question. Biosimilars seem like a big push, but which markets? Or maybe further acquisitions? Something to ponder. Okay, that's our quick dive into Dr. Reddy's latest results. Thanks for joining us.